Hope you all are doing well in the name of God. And the results of the strategy and setup and the things I'm gonna explain you in this particular session is gonna be very helpful to you because the results were absolutely crazy. And this system works really well in Bitcoin, silver, and gold. And the only reason why most retail traders, including you, won't be able to succeed because trading is a game of math, mind, market, and probability, which crushes the brain if all done manually. And for escaping the retail trap, I've built my custom trading algo, which eliminates almost about 70% of repetitive decision making, which has not only reduced my stress but also has incredibly boosted profitability of me and every other user. So let's jump straight into it. All right, so first thing you see on the screen, these are the results. And this video could actually change the way you think about trading, your life, your like everything that you're gonna experience in trading specifically. All right, because you're gonna learn a lot about shit that no one talks on this platform. All right, so the first thing you need to understand is that, okay, before anything, I'm gonna tell you that if you're a person who doesn't have the patience to watch a video without fast-paced cuts, with zero edits and music, then this video is not for you. Okay, because this video is purely based on knowledge. Okay, it's not for like a bullshit, you know. It doesn't work like that way. You can just close the video, see a next trading guru's video is gonna tell you a fake strategy. It's not gonna even tell you how you can become profitable in these markets. But I'm gonna tell you because now it's been some time since I've been trading. All right, so getting back at it. So there are two types of trading styles. Okay, the first one is mechanical, and the second one is discretionary. All right. So now mechanical simply means the that you have all these set of rules, okay, and then you are executing on the exact strategy and setups over and over and over again without any difficulties. It means that you are pushing yourself in a way that you cannot take any bad setups. Impossible. You cannot mess up with your edge. Then the second thing is discretionary. There are no set of fixed rules. It can make you a great trader because there's a book Zen, and 90% of traders there were discretionary traders who did not use a mechanical system, and they were great, most profitable traders in the whole world. But it took them years to become profitable. It took them years of longevity and losses to become profitable. All right, because there are not a fixed set of rules, high probability of emotional decisions, purely based on experience and losses. Oops, mistake. There you go. Yeah. So mechanical is exact setups with proven edge executed consistently without emotions due to almost zero decision making. And discretionary is not a fixed set of rules, higher probability of emotional decisions, purely based on experience and losses. All right, but right now you lack experience and you also lack losses. All right, you've not been in the market for years and years and years. All right, they've been in the market for decades, and 3, 4, 5, 6 years, it's not a big time as compared to them. So I'll be talking about the mechanical system that made me profitable and everyone else profitable. All right, so now I'll be jumping into the charts. Okay, so this is my exact indicator. All right, first let's understand how it works. All right, it works well in Bitcoin, gold, and silver. Okay, so the first step is that it marks out the clear draws on liquidities, basically the areas we are interested in trading at. All right, so in here also there's a condition. All right, but what it's gonna do, that it's gonna mark two types of areas where we are interested in trading. As you do see, this is an A level liquidity and this is an A plus level liquidity. All right, so which simply means that A is fine but A plus is better. All right, simple as that. A is fine, A plus is better. All right, now what happens after that is that the algo will simply wait for the price to sweep that low. As in this scenario, you see that this was the low, and then we sweep it off, we sweep that low off. All right, and then a reclaim. Now we have swept it. All right, the liquidity is taken out, but now we need to find an entry trigger. All right, now this is the main thing. Okay, it all sucks at execution, at the trigger before entering into trades. That's what sucks. All right, finding the area the price is gonna fall from here or gonna rise from here, it's not a big deal. The main issue occurs in the entrance, making the entry, getting into a trade. And that is what exactly fucks every single trader, has fucked every trader. And that's gone here because of the system that I've built, my exact strategy that I've coded into this algo, liquidity sweep, all right, and then a reclaim, and then a market structure shift on the 15-minute time frame. So what we use is liquidity sweep and then a reclaim of that particular high or low in a 12-hour reclaim window, which you don't have to worry about, and then a market structure shift on the 15-minute time frame. So in this scenario, this would be your entry. Stop loss obviously below the low, and after a 1-to-1 or this big bullish candle, you would just place your stop loss to break even and book some profits. All right, you would book some profits. All right. You can like probably, so this is according to the concept of drawn liquidity, this would be your first take profit, but you're not gonna book all of that right there. All right, it'd be like you could use this or this candle's high for your first take profit. All right, so this could be a 1-to-1, this could be your first take profit, 50% out, and then a break even trade. Boom. Okay, a little bit plus trade. Then we have the trade which was delivering from the A plus liquidity. All right, this is the banger trade. All right, this is the banger trade right there. Okay, so this was the A plus liquidity, which then got swept and then a structure shift on the 15-minute time frame, and that would be your exact entry. This would be your exact entry. Stop loss below the low, and then you'll be targeting the highs. Now, because of the fact that we are delivering from an A plus level, which is a crazy drawn liquidity, all right, now this means that you are simply not supposed to target lower, okay? You're supposed to target higher liquidities, all right? So these are liquidities, they're not gonna be your first target. This liquidity would be your TP1, this would be your TP2, and then you could hold some because you're capturing the bottom, okay? So let's see how it played out, okay? Now, your first take profit at this drawn liquidity, your second take profit. But now because of the fact we were delivering from an A plus level, I would hold 30% or 20% of this trade, and you can see what just happened. You can just see what happened. That's a 1-to-17. That's a 1-to-17R on this particular trade. Okay, let's see some other examples. Okay, there we have a short example. Okay, this is an A level liquidity. All right, then the price simply sweeps it, reclaims it, structure shift, boom, 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 boom. All the confluence is done, right? My job to make these things, your job to execute. All you have to do is execute. All right, there you enter. Not delivering from an A plus liquidity level. All right. First target would be between a mid range of this candle, right? Obviously, this cannot be our TP1 because we're not delivering from an A plus level. All right, so somewhere around the mid range or 1-to-1, right? A 1-to-1, and then stops to break even and 50% out there 1-to-1. So this is also a profit trade. Okay, then let's see some other scenario. Okay, there you go. That's a stop loss. Okay, then a good trade spotted right here. All right. So now because of the fact that this is an A level liquidity and there were multiple confluences also aligning on this particular level, which you will learn if you will be in my community. All right, you'll know how to predict the markets. All right, so now this liquidity got swept and then a structure shift right here on the 15-minute time frame. There would be your entry, stop loss below the low, and now you would be the same thing. We're not delivering from an A plus level, getting out at a 1-to-1 and then break even and then TP2, and then I would hold some of the quantity in this trade, right? Because of the fact I know how good this trade can be. All right, I know a few things that you don't. All right, and then you can see this is a 1-to-48. That's a 1-to-48. Okay, that's a 1-to-48. Maybe you did not hold it till there, you got out at here, but still that's a lot of money there on the table. That's a lot of money on the table, guys. That is a lot of money on the table. And now if you want to understand the logic behind this thing, right, just imagine this is what the price action looks like. Okay, there we go. So you can see that the price went lower from this level. It means there are sellers who have shorted here and their stop losses are above this level. Now the algo detects when the liquidity has been taken out, and then okay, now good, we are getting closer to the trade, but that's not the hard part. Okay, we are not just predicting we're gonna fall off from somewhere around this area. But now for the entry trigger, we need to see a reclaim of that particular level and then a structure shift as an entry trigger, and then you'll be targeting these draws on liquidities. All right. So that's the logic behind the strategy. And inside of my community, I'll be covering more things. All right, like this thing is gonna change everything for you, right? It shows you the direction. You don't have to analyze the things on various time frames, and you need to understand that if your system is not mechanical means that can you repeat that system over and over and over again? Can you do that shit? That is what it means to have a mechanical strategy. Right? And if you don't have a mechanical strategy initially, forget that you're gonna make money before years and years and years of losses and experiences, and you may never make money day trading, right? Because day trading involves a lot of emotional decision making if your strategy is discretionary and not mechanical. And the main thing about mechanical strategy is that it's just easy. All you have to do, all of the work is put in building that algo, and then all you have to do after that is just execute. That's all you have to do. That's easy. All the hard work was put in behind the logic of the strategy, the edge behind the strategy, the coding behind the strategy. And then once your system is fully mechanical, all you have to do is execute and wait for your edge to play out, which you cannot do in discretionary. You have to think, where am I gonna long or short? You have to think whether I'm gonna long or short. You have to think, when am I gonna enter? You have to think, where am I gonna place my stop loss? You're gonna think where you have to place your take profit. You might be thinking these are easy decisions, but when you wanna enter into a trade, you have to take these decisions, these tens of decisions, in 1 hour, and you're gonna get your brain is gonna get fried up. All right. So that's about this video. Hope it helped you all, and the instant access to the community and my constantly upgrading algos and more valuable stuff has been dropped below inside of the comment section. Stay blessed, become the best version of yourself, and if I can do it, you can too. Peace out.